Welcome to the ForkU library. Today we're going to be talking about crypto investing. So the point of this video is definitions. So cryptocurrency is a digital asset that is sometimes a replacement for traditional currency meant to be used to buy things or exchange money amongst people, and sometimes have more complicated use cases. Either way, they're generally a blockchain-based digital asset created by a company to raise money for that company or to work towards the goal of that company. You might invest in cryptocurrency. So investing. Investing is when you put money into something that isn't money with the hopes of it making you more money, such as education, stocks, cryptocurrency, and your children. You might invest in cryptocurrency, so crypto investing. Putting your money into something that isn't money, but is trying to be money in the hopes that you will make more money or it will become a new form of money. Money, 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 money. When you crypto invest, you hope that the cryptocurrency you invest in will moon. So what is mooning? Mooning is when a cryptocurrency's value skyrockets so high that that value might as well be on the moon. It is also the only word used by some crypto investors on the internet. If you follow a financial advisor on any form of social media and the only two words they say are moon and LAMBO time, then you should probably unfollow said financial advisor. So what's a LAMBO? Well, beyond the fact that it's just a really expensive fucking car, LAMBO is the word that people often use to describe what they will spend their money on when their coin moons. It's about as dumb as it sounds. So Bitcoin has already mooned, and so anybody who invested in Bitcoin can buy a LAMBO. But anything that isn't Bitcoin is an altcoin. So there are thousands of other cryptocurrencies that aren't Bitcoin. These are altcoins. Some examples of altcoins are Ethereum. Yes, Ethereum, you're an altcoin. Ripple and Dogecoin. Some of them are similar to Bitcoin where they're used to be peer-to-peer transaction coins, while others of them are utility tokens that are specific to the company's platform or a specific use case. So most cryptocurrencies and altcoins are built on the blockchain. So what's the blockchain? The blockchain is a distributed network in which information is stored in a chain of code that is nearly tamper-proof. But this is one of the most important terms in this whole dictionary, and I don't think that I can do it full technical justice, so I'm going to link to a couple videos below in the description that give you a nice full description of all the technical aspects of what blockchain is. Bitcoin was the first and is the most popular digital currency created in 2008 by Satoshi Nakamoto. It is likened to digital gold, and that's essentially how it functions in the modern day world. So if you invested in Bitcoin back in January, by now you're probably eating a lot of instant noodles. Instant noodles are, of course, the most delicious, cheap food enjoyed by millions of college students and starving artists. You can avoid only eating instant noodles by acquiring more information. So information is the kind of thing you can get by watching ForkU videos. With information, you can construct a better budget. And a budget is the way that you should be spending your money. If you budget properly, you will have life savings. And life savings is all that money that you shouldn't touch when you're getting into crypto investing. With your life savings, you might decide to start a messenger app, like Pavel Durov, the founder of Telegram. Telegram is a messaging app used by many people around the world, but is more popular in countries where people want their privacy from the government. On Telegram, there are bots. A bot is a program within the Telegram app that is used to perform some kind of function. The one that we're most concerned with is buying cryptocurrency. And once you buy that cryptocurrency, you might be tempted to HODL. So HODL is both an acronym and a typo for the word hold. Hold on for dear life. It came from a typo way back in the early days of Bitcoin when somebody tried to say, hold on to your Bitcoin, but they typed hodl onto your Bitcoin. It is now one of the most common words used in the crypto space to mean don't sell your coins. So for example, you might hodl your dog and you love it and you keep it and you don't let it go so that one day when you start to die in your apartment, it barks for help rather than just eating your face. The best time to hodl is after an ICO, or an initial coin offering. So an initial coin offering is when a company has created a cryptocurrency and they release a mass amount of it out to the public in order to raise money for their company. So an IPO is an initial public offering, or the traditional way that investing and trading has been done. A company would go public and release shares of the company onto the stock market. So a company, when it goes public, will release stock. So a stock is a share of a company that is meant to be traded or held in investment on an exchange like the New York Stock Exchange. Whether you're investing in cryptocurrency or public shares, it's important to have a well-balanced portfolio. So well-balanced means that you have some high-risk investments, some low-risk investments, some short-term investments, and some long-term investments. If you have all of these things in a nice balance, you can be sure that some of your money will be safe and some of your money might not be safe but might make you more money than the safer option. Another important aspect for your portfolio is for it to be diverse. So you don't simply want to invest all of your money into Bitcoin or all of your money into Apple. You want to invest in Bitcoin and some altcoins. You want to invest in Apple and some smaller stocks. If you have a more diverse portfolio, then when the one company that you might have invested in goes down, you don't lose all your money. So there's a diverse set of things that have value in the world, one of which is unfortunately the Kardashians. The Kardashians are a lot like money because they only have value because people think they have value. None of the Kardashians want to be called whales, but if they wanted to become crypto whales, they could. A whale in the crypto market is an entity or an individual who owns a majority of a cryptocurrency and can thus change the value of that cryptocurrency in one or a few trades. Whales might be responsible for a bear or bull market depending on what they do. So a bear market is one in which pessimism is running rampant. Prices are going down, everybody loses faith in the market, and people are selling their coins like hotcakes. A bear market is a good time to buy. Buy low, sell high. So the opposite of a bear market is a bull market. A bull market is when everybody is hyped the fuck up because prices are going up, optimism is up, everybody is trying to sell their coins because they now have all this value and they're seeing dollar signs, but selling too much in a bull market is what leads to a bear market. A bull market is a bad time to get into the crypto market because everything is at an all-time high, so you'll be spending much more money for the same thing that probably in a month you could get for less. So this video has been all the definitions for tomorrow's full episode coming out on Instant Noodle Investing. If there are any definitions that I missed and you're confused, leave me a note in the comments, shoot me an email. So like this video, subscribe to my channel, and slap the bell. Slap the bell. And all of my social media links are below. ForkU Official on Telegram, Twitter, Instagram, Facebook, and Steemit. Bye-bye. That's ForkU.